लेट्स स्टार्ट। चैप्टर का नाम है इक्विटी वैल्यूएशंस। इक्विटी वैल्यूएशंस करने के लिए हमारे पास दो मॉडल है। पहला मॉडल होगा हमारा दैट इज फाइनेंशियल मॉडल एंड सेकेंड मॉडल होगा हमारा दैट विल बी नोन एज अकाउंटिंग मॉडल। फाइनेंशियल मॉडल्स के अंदर हमारे पास दो मॉडल है। फर्स्ट वन इज एब्सोल्यूट मॉडल, सेकेंड वन इज रिलेटिव मॉडल। एब्सोल्यूट मॉडल के अंदर हमारे पास दो मॉडल्स है। फर्स्ट वन इज नोन एज अ डिविडेंड मॉडल एंड सेकेंड वन इज नोन एज फ्री कैश फ्लो मॉडल्स। डिविडेंड मॉडल के अंदर जाता है। डिविडेंड मॉडल के अंदर IV इज इक्वल टू PV ऑफ ऑल फ्यूचर डिविडेंड्स। Guys, company can have three dividend models. The first dividend model can be the constant dividend, where the company pays constant dividend. In this case, IV is equal to D upon RE. RE is equal to RF plus beta RM minus RF. Guys, RF is equal to FE minus P upon P into 100 into 365 divided by N. Beta can be of listed company, can be of unlisted company. For listed company, the beta can be COV/XM divided by variance of market. For unlisted company, it can be A, B, and C. A is beta of a proxy firm. B is deleverage. Deleverage का मतलब है beta of unlevered firm is equal to beta of levered firm divided by 1 plus debt upon equity 1 minus tax. Releverage is equal to beta of levered firm is equal to beta of unlevered firm multiplied by 1 plus debt equity 1 minus tax. Next one, RM. RM is equal to dividend yield plus growth yield. Second, the company can give you the dividend which grows at a constant rate. In this case, my IV is equal to D1 upon RE minus G. D1 is equal to D1 plus G and G is equal to BR. B stands for retention, R stands for ROE. Guys, RE अलग, ROE अलग. ROE का formula होगा PAT by equity. Next one, guys, if the company is giving you a dividend which grows at a fluctuating rate, in this case, my answer will be stage 1 plus stage 2. Stage 1 is explicit. Suppose in explicit model, my stage 1 says there are 5 years. Then guys, in stage 2, I will start with IV 5 से चालू करेंगे और उसका भी present value निकालना नहीं भूलना. Then IV of the share is equal to stage 1 plus stage 2. Next one, after you are done with dividend model, we can go to free cash flow models. And free cash flow models के अंदर guys, हमारे पास दो मॉडल है. The first one is known as FCFF model. The second one is known as FCFE model. As per FCFF model, the value of the firm is equal to FCFF divided by discounting rate होना चाहिए KC minus G. क्योंकि अगर फर्म की वैल्यू की बात कर रहे हो तो डिस्काउंटिंग रेट KC आना चाहिए. FCFF का फॉर्मूला क्या है सर? FCFF का फॉर्मूला है NOPAT minus NI. How do we calculate NOPAT? NOPAT is equal to EBIT 1 minus tax. How do we calculate NI? My NI is equal to capital spending minus depreciation plus change in working capital. Guys, value of the firm is equal to FCFF 1 upon KC minus G. Now, after value of the firm, if I want to calculate value of equity, then I will say value of the firm minus value of debt is equal to value of equity and value per share is equal to value of equity divided by number of shares. KC कैलकुलेट करना है तो KC का फॉर्मूला होगा आपका वेटेड एवरेज कॉस्ट ऑफ इक्विटी प्लस वेटेड एवरेज कॉस्ट ऑफ डेट. वेटेड एवरेज कॉस्ट ऑफ इक्विटी RE is equal to RF plus beta RM minus RF and weighted average value of debt is equal to I1 minus T. Guys, weights market value पे देना, that is amount divided by number. Are we clear with that one? Then comes FCFE model. अगर FCFE मॉडल पे जाना है गाइस तो हमारा FCFE will be equal to PAT minus NI. NI stands for again net investments, but in this case NI will be capital spending minus depreciation plus change in working capital and the entire formula will be 1 minus debt. Are we exactly clear with that one? And guys, FCFE के हिसाब से value per share आएगा या value of the equity आएगा, that will be equal to FCFE 1 upon फिर से एक बार RE minus G आ जाएगा, ठीक है ना? टू गुड गाइस. इसके बाद हम चले जाते हैं रिलेटिव वैल्यूएशन अप्रोचेस पे. तो रिलेटिव वैल्यूएशन अप्रोच पे आपको याद आना चाहिए चॉप शॉप अप्रोच वाला क्वेश्चन, जहाँ पे गाइस वी विल कंपेयर कंपनी का असेट्स विद द वैल्यू ऑफ द फर्म, कंपनी का सेल्स विद द वैल्यू ऑफ फर्म, कंपनी का ऑपरेटिंग इनकम विद द वैल्यू ऑफ द फर्म. दैट इज नोन एज रिलेटिव वैल्यूएशन अप्रोच. There are other valuation models here, other related approaches here, that is known as EVA, that is economic value added. Economic value added is equal to formula is NOPAT minus KC. KC is equal to weighted average cost of equity and weighted average cost of debt. But KC will be in terms of amount. ME is equal to market value of the firm minus the book value of the firm. Finally, we go to the accounting approaches. Accounting approaches में हमारे पास guys 3 approach है. First one is IV, second one is yield value, and third one is fair value. IV is equal to net assets divided by number of equity. Yield value is equal to ERR upon NRR multiplied by paid up value per share. ERR is equal to profits for equity divided by paid up capital multiplied by 100. And finally, guys, we get something which is yield value is equal to IV plus yield divided by 2. Are we clear with that one? Thank you and chakas for this.